And good afternoon. Welcome into Market Talk for this Tuesday, March 15th. Thank you so much for joining us and making us part of your day once again. I'm your host, Jesse Allen, and find us online, markettalkag.com. That is our home on the web, markettalkag.com. All of our streaming sources are there, along with all of our social media links, the latest news of agriculture, much more online, markettalkag.com. Well, wheat, the upside leader today. I feel like I've been saying that a lot here the last month or so. Quarter beans were a bit more mixed to lower, and we have crude oil, that market liquidating as well. We got a Fed meeting this week. A lot of things to discuss. Let's bring in our good friend Brian Splitt with agmarket.net joining us this afternoon. Brian, great to have you back, sir. Fresh off Commodity Classic in New Orleans. How are you?
Oh, it's good to be here, Jesse. Had a interesting day today, a little mixed. Definitely finished the day better than it looked like it was going to finish based on what we were dealing with early this morning. So that's good.
Yeah, very, very true. Let's start with that wheat market. Really kind of caught fire there mid-session. It was higher for most of the trade, and then we finished up sharply in this wheat market. I know there's the talk and worries out there about the exports out of Russia and Ukraine and everything there, but also maybe wheat a little bit of a hedge against inflation today. I mean, what did you see with these wheat markets? What gave us this move to the upside, Brian?
Honestly, hard to say, Jesse. It's hard to know what we're pricing in sometimes day to day. We still have problems out there between the concerns about the Black Sea region, the domestic crop here because of the dryness. So, it's hard to know what day they're going to pay attention to what influence. But big move today. We were up about 60 cents on both the Chicago and the Kansas City varieties, so your soft red and your hard red. And we did that on really, really low volume. And a matter of fact, the whole trade today was done on low volume, but 75-ish cent trading range on wheat and under 30,000 contracts in the front month in Chicago. It's pretty mediocre. But I guess the general thought is that we have some bigger picture issues long term that aren't going to get solved by a week of volatility.
Mm-hmm. Mm-hmm. Very true. Well, I think we were talking about this before we went on air. You get a big trading range like you did today, and it almost feels calm. And you mentioned there wasn't a whole lot of volume out there in really any of these grain markets, and it just felt like a calmer day, maybe a consolidation day, which is crazy to think about with big ranges out there, Brian.
Yeah, it was kind of a trend type of a day. And I guess by that, Jesse, is we didn't have that wild volatility where, up we go, down we go. The wheat market, it had its pullbacks here and there, but for the most part, the day from the opening of the session this morning just trended higher. And we saw the same thing in corn where we had the weakness overnight. But after the open this morning, we made our lows in that first opening flurry and then just kind of continued to trend higher through the rest of the session. So I know what you mean by kind of that calmer feel to it. We still had some pretty decent sized trading ranges on the day, but really without that schizophrenic volatility.
Now, the corn market, it felt like it's kind of caught between wheat and soybeans right now. At least we saw that on Tuesday. I know we're watching South American weather still. April is going to be a pivotal month for that safrinha crop in Brazil. We got spring planting coming up here in the U.S. We have acreage numbers coming up. What's your thought in this corn market, though? And obviously, as we look at the board today, we saw the May contract 758 at the close, up 9 3/4. So we saw a bit of a rebound off the lows. But with corn, do you feel like it's kind of caught in the middle between the wheat and soybeans right now?
It sure looked like that for a lot of the day, where corn, kind of sat in the old crop near unchanged, and you had beans down 20 and wheat up 20 earlier in the session. It wasn't really evident which way the corn market wanted to go. As the wheat market continued to add to the gains, and we saw corn go positive. And another sign might have been the spreads. When you look at that May, July, and you had mentioned that May up 9 3/4, July was maybe up 4 or so. Then you had the new crop contracts lower on the session. So we did see bull spreading. I think the bull spreading started before the futures really started to come off the lows. So the spreads still look strong. We still have May trading, over 30 cents inverted over the July contract. That is not a sign of weakness in the market. The commercial entity that we are attached to, which is John Stewart and Associates, we've been looking at the July versus the September corn. And I think the general sentiment there is July 50 cents over September may be cheap. If we, really see the exports come to the U.S. like we think that they will as we get into spring, based on the prices that we've seen on the board, the producer most likely has sold the old crop that they wanted to sell at these price levels, and the market's going to have to do a little bit more work to get those other bushels out of their bins at this point.
Looking at the soybean market as well, down today off the lows. I know some of that liquidation might have been tied with bean oil lower, with crude oil trading lower here today, just lower in the edible oils all around. What do you make of the soy market here after Tuesday's action? What are you seeing on the charts? Anything stand out to you?
Yeah, actually, May soybeans went right to really, really good support this morning on those lows. We had that initial high that was made in mid-February, and we had pulled back, and then was about 3 days later, I was about a 90-cent pullback. Then we went up and made new highs in late February. We made another low. So I think that first low was February 15th. The low after we had the invasion in Ukraine, the day afterwards, was February 25th. So if you just draw the uptrend from one major low to the next, that was the low here this morning. The other thing here on soybeans is the 20-day moving average. We don't touch it very frequently in the beans, but we did trade to it this morning. And the last two times we traded in the 20-day in soybeans was a very, very good buying opportunity. So, we'll see how that persists moving forward. But at least for the time being, it looks like we had a good correction kind of brought on by some outside market forces, namely the energy market continued decline, and took us to good support. Now, I think if we end up taking these lows out, then you might need to think twice about it. But so far, so good as far as the soybean technicals go. And maybe part of that weakness too, since to me the energies are under pressure because of the city closures and lockdowns in China, and soybeans would be more of a China-centric commodity. So maybe a little bit more likely to see pressure spill over from anything that has to do with China, and especially, as you had mentioned, with crude oil and its influence on soybean oil and all the other edible oils, that probably added and exacerbated the weakness that we had today.
Well, Brian, overall, we look at these markets, and I know a lot of times you as a trader, me out in the media, I hear, how high is corn going to go? How high is beans going to go, et cetera, et cetera. But it's not, it shouldn't be about how high it's going to go, but it should be about the trend and what works for your bottom line. So, I mean, you look at where things are at here as we are halfway through the month of March. We're moving towards those USDA planting acreage numbers coming up. We're going to get into the heart of spring planting. What are your thoughts? What's a recommendation for guys maybe to consider here, or just what do you see trend wise that we need to keep an eye on? I'll kind of open the floor to you. Just what are you seeing here as we move forward?
Yeah, I think for both corn and soybeans, the trend is still up, so that hasn't changed. We've seen, old crop corn, whether it's the May finding support in the low to mid 730s, the July contract finding support just above $7. So, I think we're in an environment right now where the main message is to maintain protection under the market, likely with some kind of a put type strategy, but allow yourself a way to maintain upside mobility, whether it's by not selling a call to pay for your put, or selling a call that's way out of the money to give yourself some comfortable windows. But we also don't want to get too overdone on physical sales. So we've seen years previously where you may feel like you're 50% sold on a cash market basis, and if we see some weather issues this summer, and it looks like that potential is lining up because of how dry it is out west, and we'll see if that creeps further east as we get into the growing season. But we don't want the idea that we're 50% sold to turn into being 60 to 70 to 80% sold because of crop losses. So if you are a more aggressive cash marketer, then we definitely would suggest that we do some work with some call options to make sure that there's some upside mobility, especially if you end up with a short crop. But I think the biggest risk right now is probably more so on a continued threat from a macroeconomic standpoint. So we've got a lot of friendly things working for us in the fundamentals for grains. Again, we can beat this Black Sea region story to death. What type of crop we may or may not plant in the Ukraine. Even if they do plant a crop there, is it going to be a crop to export, or are they going to switch up what they plant a little bit to have more feedstuffs for their country? So maybe it's less corn, less soybean oils, or I should say sunflower oils, and maybe more rye and millet and oats and peas and things like that to actually feed people instead of export to other countries. So even if we see planters rolling, it may not be for the crop that we want to see them plant for export purposes. So I think we've got an awful lot that we're still going to be dealing with in the next 2 to 4 weeks to get a sense of what's the reality in the Black Sea region. And so I think that's the message, keep protection under the market, keep the upside open.
On the macro side, you mentioned that a little bit. We have Fed meetings here going on this week. A lot of talk surrounding what the Fed's going to say in their statements tomorrow on Wednesday. Obviously, inflation is a big concern for many folks here across the country and around the world. What are your thoughts with the Fed meetings here this week? What are you anticipating from the Fed?
I don't know if they're going to go ahead and raise rates or not. They need to. It has to be done at some point. But, the stock market's obviously pulled off the highs quite a bit. So that's one angle that makes it more difficult. So, what's more important to the Fed to keep the stock market at levels that are not at the highs, but still relatively close to highs, or to rein in inflation? I think for the average everyday person, they would much rather see the powers that be do what they can to rein in inflation. That's going to have a more meaningful impact on their day-to-day lives. But we've seen the administration kind of pass the buck and suggest that it's because of Ukraine and Putin's invasion of why we're seeing this inflation. I don't think that's the case. Inflation's been going on for quite some time. First it was transitory. Now it's Putin's fault. So I really don't buy into that, but we're already seeing, kind of the pass the buck type mentality there. So as far as the Fed, I don't know. Again, at most, maybe they raise it a quarter of a point, but I'm not going to hold my breath.
Looking at livestock, Brian, another good day in the cattle markets. Live cattle have had a couple days in a row here looking pretty solid. Feeder cattle were up for the most part today as well. You look at the cattle market, obviously there's some thoughts out there about demand and restaurant demand and everything going on with inflation and et cetera, et cetera. But as you examine the trends and the charts in the cattle market here this week, what stands out to you?
Well, I think the first thing is the feeder cattle market has been extremely sensitive to the price of corn. And that's not something new, but I think the level of sensitivity, it seems to be trading at almost an inverse of corn movements. And today was the first day where we had the corn board lower. Feeders were higher, then corn started to come off those highs, feeders backed off, but they were able to come back off those lows, even with the corn market going, finishing near the highs of the day. And I think that relationship at some point is going to divorce itself, and we're going to go back to trading a little bit more, directly, fundamentally into the cattle market. Maybe a point I would have on cattle in general is that, when you've got government policy and the attitude, maybe the best example of this is energy policy, where obviously the world powers that be want us to move away from fossil fuels. And so this green initiative has had a major impact on energy values. We seem to have put the cart ahead of the horse, and we're not seeing the investment in fossil fuels that is needed to keep up with demand. And so the things that world governments don't want us to use keep getting more expensive in price. And beef is one of the things on that list. And I just have a real hard time thinking that we've got all this inflation going on around us and we're not going to see the beef market participate in that. So I'm friendly of cattle in the big picture. And then you go back to things that we've seen in previous years where feed costs have been at similar levels, and it has a long-term lasting impact on cattle values. So the drought in 2012, we saw record live cattle futures 2 years later. And I think when you look at some of these deferred contracts, your February 23, your April 23, these are contracts that are in a nice long-term bull market. And I think you're going to continue to see those markets where we see a buy the dip type of a mentality in the long term.
And over in the hog market, it's felt like maybe a bit of a follower the last 2 days. I know we saw a strong day on Friday. What's your thoughts in this hog market as we get this week going?
Yeah, we're finding support right around 100 right now, and we seem to be consolidating. We had a gap lower, and we haven't been able to fill that gap, and this market's been jostling around here. My own personal opinion, I think this hog market has some additional downside to it, and I think the cattle market has some upside, and we may see where the story for a while was the hog market and hogs, had that very aggressive run, and maybe the fund manager takes some of the profits out of this hog market and starts looking at buying the cattle market with some of those gains. It's not the most common thing for the fund manager to really be heavily into both markets at the same time. So I could see the fund manager continuing to take some values out of this strong hog market that we've seen over the last couple months, and use that as an opportunity to buy this dip in the cattle market.
Brian, we always appreciate the insight and analysis when you're on the show. Any final thoughts you have for us today?
Yeah, really just to reiterate that we're in a market that I think we're going to continue to see at least the next 3 to 4 months, volatility, the likes of what we have not been used to, and maybe we've gotten a little bit numb to it in the last month or so once the invasion of Ukraine happened. We saw some really extreme price action, but I think that's probably just a taste of what we're going to have up to come. So, one of those things where you need to put yourself in a position where it's a little bit easier to make decisions in those volatile times. And if that means that you need to come in here and have some puts under unpriced bushels while we hope for higher prices, then so be it. If that means that maybe you need to spend 20 cents on a call to make it a little bit easier to pull the trigger on some sales come May, June, July, then so be it. But put yourself in a position to not be in a stressed out mindset while you're doing your summer marketing.
Well, Brian, we appreciate the time, of course. And if folks need a little advice, need some help with their marketing, I know they could reach out to you and the team there at agmarket.net very easily, can't they?
Yeah, you can look at our website, www.agmarket.net. You can reach the general office line at 844-4AGMARKET, so 844-424-6758. And you can reach me directly at 815-665-0463.
And you can download the app as well in the App Store and the Google Play Store, agmarket.net. With that, Brian Splitt, appreciate the time on this Tuesday, sir. Thanks so much. We'll talk to you soon.
All right. Thank you, Jesse. Appreciate it.
Brian Splitt with agmarket.net, our guest today here on Market Talk. Find us online, markettalkag.com. This has been the Tuesday, March 15th edition of the show. I'm Jesse Allen. Have a great afternoon.